Welcome back, friends. My name is Deepak More and you are watching my YouTube channel, TheIndianOptions.com. Today we are going to discuss one of the trading behavior, and the trading behavior I call it like investing completely and investing with step approach. So there are two kind of behaviors that we are going to discuss in this video. One is like investing completely, meaning that once you get the market direction, you put everything that you have, just dump it, purchase everything, and then wait for the market basically. And the second approach is that you are more cautious kind of trader, wherein you're just purchasing little bit, then again after some time purchasing little bit, and then over a period of time you complete all your purchases. So these are the two kind of behaviors now, and we are going to discuss this with respect to the different kind of markets. Now in the next slide, I have taken 5 examples of 5 different kind of markets. Now from top left, first video is I haven't captured the dates as such, but this graph is showing that the market, once it gets the direction, it is continuously just going up, and second video, graph is continuously going down. So these two markets are very directional markets. Okay, now the third market was like initially it had crashed, and then it has recovered, and then it has stayed almost same constant once it has climbed a particular level. This is the third kind of market. And fourth kind of market is very volatile market. Sometimes it's up, sometimes it's down, and then it crosses the middle line so many times. So that market is kind of like very difficult to trade in, because we don't know what is happening, right? So, and the last market I have taken an example of like initially it has gone up, and then again it went down, and then almost like whole day it was like almost flat market. The market didn't move. It was as if like all the traders have taken holidays and decided not to trade after a certain point. It was like that state, right? So these are like few kind of markets, and these are very common markets. You'll find it like every almost day one of this kind of pattern you're going to see. Okay, now there are so many different kind of market, and of course when the market closes, that time everybody gets intelligent, like, okay, today I would have done this, I should have done that, I should have done this. But the main issue is that as soon as the market opens, you are not God, I am not God, nobody is God, and nobody knows actually how the market is going to react, right? So after the market, yes, everybody becomes intelligent. So that is basically hindsight. So nothing to worry. There are a lot of if and buts, but that has certainly no meaning. As far as the maximum help you can get from this kind of intelligence is that you can learn yourself that, okay, this is the something happened and you could have done this thing. Just keep that in your mind, or write down in your mistakes diary. That's about it, but there's nothing you can do about it, right? But it's very difficult to predict in the morning, like what happens, or when the market is live. It is really very difficult because market is so fast and it goes up and down so quickly. It's really very difficult to understand what goes. So even if we can predict on our experience, then most of the times we are wrong actually. As soon as you open the contract, the market might just reverse its direction. So being cautious in opening the trade is only the possible thing that we can do, right? So we are going to discuss two type of approaches in the directional market, and then one kind of approach in the flat market. Okay, now the next slide, step approach in the directional market. Now how step approach and investing completely works in different market, this is what we are going to learn. And now in this step by step cautious approach, you can see that before 9:30, before the market start, the pre-market open, and it's going from high to down, and then as soon as the market opened, it started to go down. So at that point of time, one person, so we are going to think that okay, the market opened up and it's going down, so possibly today the market might go down. So somebody might open a put buy contract at that point, okay, where I'm saying put buy. And then after some time the market actually went in red, and then again it started going up. And then when it went up, then you realize that okay, whatever you had done a put buy contract, it is not happening right now. The market is going up, so whatever put buy contract you had open, it would right now be in a loss. So you can actually start buying opposite contract and just close this contract by taking whatever loss and just buy one contract here. Then as the market progresses throughout the day, then you keep on buying more contracts, and then you will see that at the end of the day you will make some profit. So this is one kind of approach wherein first you buy only one lot in put buy in our case, then again after few minutes, if the market direction is still in your favor, then you buy four more more contracts. Now in this particular example, we saw that we opened the contract, but the market went in the reverse direction of your expected direction, because at that point in the morning you didn't know how the market is going to react, right? So there was no chance for you to know the future. So at that point you thought the market is going down, so you did a right thing by purchasing the put buy contract, but the market, it went in the opposite direction. It always does. So understanding that okay, the market is not going in your favor, and closing the contract as quickly as possible might minimize your loss. And then once you get a very good direction, then you are going to step by step adding the contracts till you get a good thing, right? Now in the next slide we are talking about investing completely. Now in this situation, what has happened is, now again it is the same graph which we spoke in the previous slide. Now in this graph, what happened is, again the market saw that okay, the market is opened, and then it started going down. And as soon as the market opened, now you say you you wanted to purchase, say 15 lots, 20 lots, or doesn't matter. So as soon as the market opened, you opened the put buy contract, all of it, the whole investment is done in the put buy. And now the market reverses the direction. In that situation, what happens is, you will have to close all those lots, and then the loss that you are going to incur because of this is really more at this point of time. And then again you go and you buy the call buy contracts, again you invest the whole amount of money in that. And then when you go to the market, and then you will see that in the middle, the last red color arrow I am saying, now today's break even point is going to be at somewhere between 1:30 and 2 o'clock, somewhere at that point. Because initially when you open a put buy, lot of money you had invested there, and then the market went in opposite direction, so you took a loss there. And then again you waited for some more time to open the call buy contract. So you have wasted a lot of time in this, and also you did a wrong side of contract, so you incurred a loss. To overcome this loss, or to recover this loss, it will take certain profit running that you have got. So you have got some profit stride there. So some of the stride you will have to waste it for balancing that initial previous loss that you had taken, right? And then after second of the day, then you can actually start making money. So this is another kind of approach. So based on which kind of behavior you are, I personally try to take one lot each, and then look for the market. If it doesn't change direction, then again I open, and so on and so forth. So I basically prefer to take the step-by-step approach, because market is really very uncertain. We really don't know what will happen when. So it is better to be cautious than to be sorry. So I usually do this way, but there are some traders who would prefer to just go, because sometimes if the market actually goes in the favor, then you can make really lot of money, because by investing small in steps, you lose lot of time. First of all, you lose lot of trend. Actually, when you finish investing all of that, at that time the market is usually at a peak, and then from there the market usually tries goes below and something, and then it's completely mess. Sometimes it happens that way. So purchasing the contracts, all the contracts initially is also a very good bet. So either way, it is personal choice of yours. I try to take very minimum profit and very minimum losses as much as possible. So my behavior is the other way. If your behavior is that way, it all depends on you basically, right? So these are the two kind of behaviors when you see in the directional market. Now in the non-directional market, none of this thing will work basically. Neither the step approach works, neither investing completely will work. In the non-direction, you will lose money just by opening the trades and then closing it, and then again opening the trades, again closing it, because you'll see that you'll open the put buy and then again the market goes, you'll close put buy, you'll open call buy, and then again the market will go up, and so on and so forth. So unless we are live in the market and navigate the up and downs appropriately without making any missteps, it's very difficult to earn money in this kind of market, unless and until you are opening a short strangle strategy, which we have learned in actually the basic strategies section. It was, I think so, second last video of short strangle. So that short strangle kind of strategy works in this kind of flat market and not the directional market. So you need to understand which kind of behavior you have, whether you have a step-by-step cautious approach or all-in-one-go approach. It is all personal choice. So that's about it for this kind of this behavior video, and thank you very much for watching my video, spending really time. And if you have any questions, you can always put it in the comment section. I'll try to answer as much as I can. And please subscribe to my videos. The subscribe button is right here. And also please, I'm going to upload this presentation on my website www.TheIndianOptions.com. Please download from there, log in, basically register yourself, log in and download that PPT. And while you are watching this video, have that PPT in front of you. You'll get more better understanding about what I'm talking about. So that's about it for this video. Thank you very much, and you have a nice day. Bye bye.